Um, yeah, welcome everybody here in the room and also at home, and welcome also everybody in a couple of months when they are watching the YouTube video, which will then be online in the future. Let's start directly with a brief introduction round by everybody. It's a very interesting panel because it's basically the large world of institutionals, and that's basically something very, very, very different when you compare it to startups and very many of the other topics. With this, I would like to directly maybe hand over to Christoph, who had the idea for the panel, who also have proposed the panelists, and then we maybe quickly do a round. Who is who, where is he working, and what's your insights so far? Christoph.
Philip, many thanks for having us here, and many thanks for giving us the chance to share our thoughts on token economy and on digital assets. So my name is Christoph Hock. I'm running the trading desk at Union Investment. We are a Frankfurt-based asset manager with a global outreach, involved in the traditional asset classes, cash equities, fixed income products, multi-asset solutions, but also for a couple of years with a clear focus on the topic token economy and digital assets and all the opportunities we have for our investors to enhance, to deliver new services for them.
Perfect. You want to go next?
Ouais. Hello to all, David Durochou, Société Générale Forge. I'm in charge of the business development. We are a startup fully owned by Société Générale. And we are operating in the native security token space since 2018.
Perfect. Please.
I'm Andrei Kazantsev. I represent Goldman Sachs. This year we made a few headlines by initiating trading in crypto derivatives in cash settled format. But for us, digital assets is a growth initiative. It's so much beyond trading and client facilitation. We're exploring avenues of using blockchain technology in increasing efficiency in the financial instruments that we trade. And with our colleagues, for instance, with our colleagues at JP Morgan, we are trading repo on blockchain on a daily basis. We are exchanging collateral on blockchain. And trying to issue bonds. So there's a lot of projects that are going on for us, and we're investing in the companies as well.
Perfect. Welcome. And finally, we have Holger.
So my name is Holger Meffert. I'm head of securities management in DZ Bank and coming from the classical role of securities. But nevertheless, there are guys out there, the Union Investment wants to have some tokenized assets, and therefore we're, as a depository bank, have the honor to deal with them, to settle them, to do the custody for them, and therefore we're trying to find out if the new technology possibilities is able to deliver really new processes which are more efficient, more have high reliability, have more services to the clients, like Union Investment, or even to the retail clients on the other hand, and therefore we are starting a project setting up a digital custody solution really to be able to add on any kind of use cases which we started so far, from swaps on the one hand up to tokenized bond on the other side, and finally at least be able to deal with Bitcoin and Ether on the other hand.
Yes, thanks everybody. So the interesting point with this panel is that you nearly have the entire value chain here sitting on our panel. I think that's very interesting. We didn't have this before. We also have had your companies not yet before here at the CAC, so very happy here. And when we pre-discussed the panel, for me it was a surprise that we are not able to focus on specific assets. I would have expected we just do debt tokens or DIS tokens or whatever. I also expected that we might not be able to talk about crypto assets, and in the discussion previously it got clear that we cannot limit the scope of tokens because all of you are doing multiple experiments, trading desks and so on at the same point of time, so there is no limit to specific types of digital assets. This is what I personally was surprised with, and with this I would like to now also ask everybody here very briefly what kind of assets are we talking about now? Maybe some quick illustrations of the projects you're working on or what the assets you're trading.
We start by the origination. Okay, so we have two asset classes we are working on. The first one is mainly bonds. Bonds are very vanilla products, and it's very interesting for us to start. We can attract high-value issuers like EIB we did, and we work with along with Christophe on that. It's not too complex as a product, so it's relatively easy because the matter is not technological, it's legal, and it's very complex to explain to regulators that we are SocGen and we don't want to go through too complex project at the start to manage to deliver a real security based on public blockchain especially. So bond is a very good product to start with. It has also a very good interest because blockchain can be mixed with let's say its traceability function for doing green bonds, etc., and mix between the concrete physical economy, physical world, and the finance world. And blockchain for us, especially public blockchain as a worldwide support, is very interesting in that matter. We are doing also structured product. Our structured product is we have a very big franchise in Société Générale, so it's relatively for us interesting in terms of digital transformation of the value chain within SocGen, the way we trade it, the way we distribute it. Blockchain is obviously a worldwide market infrastructure, so from a distribution standpoint, it's very effective. It does not prevent, of course, the limits of the classical marketing. We have to scope with the financial product. Nevertheless, it's very interesting. And we have a kind of hybrid positioning because we are doing MiFID security, financial instrument. Nevertheless, we are using public blockchain. So our products, even if MiFID financial instruments, are fully compatible with all the cryptocurrency world, let's say, decentralized finance, DAOs, crypto exchange, etc. It does not mean they are eligible for use in that space. Nevertheless, we see us as a kind of having one foot in the traditional financial industry and one foot into the, let's say, cryptocurrency world. Maybe one example to illustrate that, we have been approved by the MakerDAO community to put a regulated cover bond issued by SocGen within a smart contract, the Maker smart contract, and be granted liquidity. So it's a kind of repo operation, but with a stable coin. So we put a regulated bond and we get an unregulated asset under the form of DAI, a stable coin. It's for the sake of the operation. We don't, obviously, it's not a funding operation in that case. It's more to demonstrate that we can achieve that we can hybrid between the two worlds, to demonstrate also to the investor and all the buy side which are working with us that we can tap new liquidity pools through those systems, and as well to test, which is very important. It's more from an egoist, let's say, CIB view. All the repo, the repo based on token, because all the repo market is obviously very key in the ALM of the CIBs, of all the banks. And if we can, let's say, even cut 1/4 of basis point or gain even small efficiency through blockchain and tokenization of assets for repo market, for us it will be let's say very interesting in the way we manage our liquidity. So bonds, further development probably on green bonds and linked to economy, structured product, repo market, and of course underlying of that question of the custody. We've been communicating a few last months on that, along with Société Générale Security Services.
Perfect. So you heard that's a very long list of all kinds of explanations.
Well, we are very creative. We are very creative.
Yeah, no, but I mean this is a compliment, right? Who would have thought a couple of years ago when we talked about Hyperledger and R3 that now in 2022 you're doing hybrid tokenizations between crypto tokens, crypto assets, and let's call it legacy capital market products. Christoph, André?
Yeah, thank you. I just realized, David, Philip, that by coincidence, when looking at the value chain of investing, we are sitting here in the right order. So you as the originator, then me representing our investors, and then with Goldman we have the broker, and finally when it comes to settlement, when it comes to clearing to the products, it's Holger representing custody. So as David was alluding, innovation is really key for us in this area. So it would clearly be not a wise decision as a large asset manager to lean back, to follow the processes which are going on, and then when structures have established, then at late stage to step into the market. So for us, it's really key to have already the foot in the door, so to say, right now. We started the discussion in-house about token economy, about digital assets, as mentioned before, something like 3.5 years ago. We're looking for a number of use cases, there is limited interest from investors right now, but it's important for us to create readiness before investors are knocking on our door, because then actually you will have a time to market of about 12, 18, 24 months, and therefore we need to have processes in place, we need to be ready before then getting involved with, before clients are getting involved with us on these topics. So what is it what we've done in the past? We started about 1.5 years ago investing in a crypto ETN. This was a kind of test trial we did. We went internally through a new instrument approval process. And that's a product we are trading right now for 18 months. Then also about 1.5 years ago, there was, and SocGen and Goldman were book runners of this transaction. There was a tokenized EIB emission in the fixed income space, EIB, a European Investment Bank, quite innovative in this area. And quite happy, quite proud to say that we as Union Investment have been literally the only and the first continental-based asset manager getting involved in such a type of public transaction. So we've had, I think, David, it was a kind of time window of 2 weeks.
1 week. 1 week. We spoke on Friday. And on Thursday, we got the order. So, voilà, the book was closed. So,
yeah.
1 week to onboard, very nice.
For new process for us, it was kind of discovering the moon from our perspective. It was quite a really short period of time, but very happy that we managed to get it done. We've had about 50, 60 colleagues involved, from legal to compliance. All the back office departments were key for these transactions. We've had our retail marketers involved in this deal. So just whole Union Investment literally was represented, was involved in this transaction. Where we are working on right now is it's another experiment. It's a smart contract where we try to replicate an interest rate swap. So interest rate swap, also like the EIB issuance, kind of traditional financial product, where we will find a new wrapper combining blockchain technology with a traditional finance product. That's where we are pretty much there. I hope that by the end of November, beginning of December, we also can trade this transaction. So therefore, innovation, finding use cases, experimenting in the very best interest of our investors at the end to offer best-in-class services, and that's really key for us. In general, blockchain, DLT, key topic when looking at the infrastructure. So a number of processes, again, especially when looking at back office and then clearing and settlement. I think we might find significant improvements of existing processes when looking at settlement, and Holger, he will also touch on this topic. We might talk in a couple of years about atomic settlement. So when someone would from a helicopter perspective set up a settlement process, as of today, no one really would consider that we make it T+2 or we make it T+3. We are talking about counterparty risk, we are talking about market price risk. So atomic settlement, instant settlement clearly is the goal to achieve when looking at infrastructure, when looking at processes in settlement and clearing. And then another key topic I would like to highlight is the whole area of digital assets. I was just describing that we replicate existing financial products in a token format to create efficiencies. But on the other hand, the digital asset area will also give us a humongous new investable universe for products where we have in-depth knowledge, but products which are, as of now, non-fungible. So when looking, for instance, at private equity, private debt products, these are typically products where, as of today, investors have a starting amount north of 100,000 euros. Having these type of products, alternative assets in format of a token as a wrapper, due to the fractionalization, you have the ability to invest very small amounts in these products. Also, pre-IPO investing in the equity universe. At the moment, it's an area which is non-fungible, where investors have very little opportunity to get involved with the token format. You have the ability also in a couple of years' time to invest in these type of products. And one area which is also key for us at Union Investment, the whole ESG space. That's also something which will be heavily supported by token. For instance, you can take a wind park and you just put it into a token as a wrapper and make it accessible for retail investors. So with the topic of fractionalization and with the topic of fungibility, it's clearly an element where we talk about democratization of investing. We as Union, we are part of the cooperative banking network, and that's especially something which is, I think, definitely of interest for our investors. So great opportunities, I think, when looking a couple of years down the road, and I'm very keen to be in the lead of this process.
Yeah, excellent. And Andre?
Yes, so what we're hearing is a lot of work is being put into tokenization, and which then will lead to benefits across the back office, across the counterparty risk. On our side, Goldman is a client-facing bank, so we'll try to facilitate anything our clients are willing or exploring to do. In this case, we're working together again to establish and build out a tokenization platform as well from our side, which not only covers effectively the products that Christoph highlighted, but it can be extended to pretty much anything. It can be extended to equities, it can be extended to ETFs that are currently trading for specific provider. They can be democratized even further. They can expect it to be like big mortgage, big real estate projects as well. But before that, so to step back, we are a big trading house. We are big, and one of our main aims is to provide liquidity to our clients or provide market access to the products that they're not already exploring to trade. So that's why we were we were the first bank to create a principal desk to provide market making in cash-settled derivatives. So we're providing in Delta 1 instruments, non-deliverable forwards, but also in options. And by providing options, it allows a big user base to either to effectively hedge their exposure in much different ways than they will be just by just trading spot or just trading futures, for instance. Beyond that, beyond market making, and everyone is saying, well, it's a high volatility asset. How can it be investable for big asset managers? In reality, a lot of the asset managers are already involved in very high vol currencies. For instance, like in FX, we've seen many episodes of local volatility in, for instance, in Turkey, in Russia, in Brazil, in many EM countries. So this is not something new, and it's more, as long as you put robust risk management frameworks around that, it's manageable, and it's another asset class that potentially can provide high yields to customers as well. So, but for us, digital assets, it's not just trading. We are also exploring, our team is growing quite rapidly. So from around two and a half years ago, where we were about 5 people, now there's more than 60 across the firm, and they're touching all aspects of the firm. We're trying to improve back office efficiencies in terms of atomic settlement, for instance. We're trying to see improve use of a balance sheet by doing intraday repo trades, which were not possible before, just to require the cash on demand effectively. And I think the use of blockchain is just going to increase and among the financial institutions, especially as more and more are going to get involved, because our customers, ultimately is our customers and our clients are really looking into the area. It used to be only hedge funds were interested in crypto. It's definitely not anymore. That discussion has progressed to asset managers, to pension funds, into just understanding what the space provides beyond just investing in the underlying crypto.
I come to this in a second. Olga, what is DZ Bank doing?
Well, from back office, I'm a back office employee, and therefore I'm responsible to handle with any kind of stuff the front office guys really want to do, and that's my task. And therefore, what we are focusing on, and it's the tokens they are focusing. And the great thing for us is really to have the opportunity to combine products roads and to combine our engines in the way that, from a today perspective, we have one really thick pipeline for securities that's highly STP. That's not the key issue, but any other stuff from the financial instruments in the institutional business has nearly its own production road, and therefore we can combine anything together. We hope we can combine anything and really do some kind of efficiency gains from the processing on the one hand, but also from stuff like collateral management, risk management, where we have all our assets really on dedicated wallets, on known stuff, and the process chains or the process ways are nearly the same. So therefore, for us, it's quite easy, really set up a framework which is able to handle this thing. And the one important thing for us is do it in a regulatory sufficient way, because this is a thing we have to grow, and we have to work with any kind of supervisories and authorities, the regulators, and the last point is really the cash side of the stuff, which is quite important for us, really, to find a way to have this finally atomic settlement on chain, because there's a long way to go to do it really in central bank money, because this is the way you need for institutional business.
Yeah, makes sense. And with this, I think we can make a very quick summary at this point already, where we say it's basically affecting the entire value chain and all types of assets for, we have heard it, multiple types of clients. Maybe, Andre, what about cryptocurrencies? You mentioned it already. Is it declining? Is it growing? Is it significant volume, or is it like just a tiny little bit?
Look, yeah. In terms of client interest in despite, well, I would rather say, despite 80% drop in prices across the board in the cryptocurrency world, the volumes in dollar terms are stable, which just implies that in native volumes that they're increasing. And we're seeing, especially for us, what we're seeing is actually more interest from our existing client base, because the events of this year, what have highlighted is the counterparty risk embedded in the DeFi space, which some of our more traditional clients are still not willing to take. And so that's why they're looking for counterparty like Goldman Sachs to provide them exposure that they're still trying to get in the manner that they're comfortable with and in the manner that they're used to trading. So I would say actually opposite is the number of inbounds, the number of client calls we're having is constantly increasing across the board, across different client bases. And the volumes that we are transacting is going up as well, especially because we're onboarding more and more clients.
Very interesting to see this basically in the large-scale financial industry, not just with smaller-scale crypto exchanges. What is needed to basically proceed to accelerate it? Where are hurdles out there? So what needs to be done to have further adoption? Maybe. David.
Yes, further adoption. Alors maybe a point on the regulatory. I think that the Commission has done a very good work in structuring the pilot regime for security tokens, which regulates all the MiFID securities under a form of a token. It has done also a big work on the MiCA regime, which will also frame what is a cryptocurrency, how it works, what are stable coins, etc. And clearly it was necessary. As well to demonstrate that we are not fearing this ecosystem. It can be discussed at the political and regulatory level, so that's very important. Today we are waiting for those regimes to come into force. Clearly from a CIB side it will be a starter. The ECB has been engaging also with all the digital euro topics. It's very important that they accompany as well the pilot regime, because if we have only the security leg and not the cash leg, we don't extract the value that we expect from instant settlement, blockchain-based smart contracts, etc. And we need as well client engagement, both on the issuer side and on the buy side. On the issuer side, we have a very good traction because they see that here there are potential, a lot of digital transformation for them, platformization of finance, etc. The buy side is a bit lagging behind because finally the yield and the returns are relatively similar to what we have on traditional assets. And they are waiting, I think, for the demonstration that the cost efficiency, the improvement on the custody side especially, will be, let's say, translated into less fees, higher yields paid by the issuers.
Okay. Any more points, Christoph, please? Yeah.
Yeah, just can echo what David was saying. The financial industry is a business which is at an extremely high level based on trust. Trust of investors into institutions like us, trust of investors into the governance of the whole ecosystem. And therefore, regulation is clearly a key piece. And my guess with MiCA, we discussed it this morning with a pilot regime, with the electronic Securities Act we have in Germany, we have here in Europe. I think we are really on a good path. When here in Germany the new government came into place, it was also a key element of the coalition agreement they made, that digital assets are clearly in the focus and in the spotlight. So therefore also from a government perspective, big support, and I'm really confident also in terms of regulation that for us, the key element when looking from a trading perspective, to deliver best-in-class execution for our investors, that we will achieve it also in the digital area space.
Yeah, we already come close to the end, unfortunately, but highlighting the euro topic, somehow getting the euro on chain to have basically the efficiency gains. You mentioned MiCA regulation. This has now been written on paper, so this is all good. Everybody can prepare. It will come into force next year. I think that's very good. We should see a very exciting year next year, and afterwards, once these developments lead to MiCA and other regimes coming into force. Maybe Holger, Andre, would you like to add something? What is needed to have further adoption?
Well, just to add on the regulatory topic, it's not just European regulation, it's a global regulation on its own. Because, like, take us, for instance, we are a global company, we are regulated, we are responsible to regulators at every single jurisdiction, but also on the global level as a firm. For adoption and to build up volumes and economies of scale and network effects, I guess it's really important for big banks like ours and like our colleagues to get involved in the space as well, because ultimately by establishing a bigger interbank market in the digital asset space, it will improve the liquidity and access to all of our clients, because we share a lot of these clients anyway.
Yeah, and if I may say this, I think that the USA is lacking here basically because they are one of the largest market here, and they need to basically also increase their efforts. Well, they are doing this, but it takes time.
The benefit is that there are lots of working groups across different jurisdictions, across different asset classes as well within digital assets that are being worked upon of all sides of. So there's definitely progress. There's more to be done.
So it's all underway. Holger, any word from you?
Well, but for me, it's quite important is that although a lot of guys in the retail market say decentralized network, they are there. We have Ethereum, public Ethereum, that's no problem. But for the institutional business, the market participants have to agree on networks, on standards, and have to bring volume on them. And I think that's a quite important point, that in decentralized world, any company, even it's Goldman or SocGen, cannot define their own standards. We have to define a capital markets-wide standard, which is more than a company standard, and really bring volume on them, bring traffic on them, that therefore can really let this thing happen and benefit from the potential efficiency gains we all see that we can do.
Perfect. Yeah, thanks very much. It was a pleasure. I'm positively surprised to see all this happening. We basically dreamed about this a couple of years ago. Now it starts to happen, and basically everything is underway. I give the word back to Marcel, and the next topic will also be interesting. It's about the carbon tokenization. Thanks.
Exactly.